When you save money in a traditional bank account, it earns little to no interest, maybe 0.5% a year. But inflation? That's rising at 3 to 6% a year. That means your money is losing value every day. Your $1,000 today might only be worth $940 in real spending power a few years later. Now, let's say you invest that same $1,000 into an index fund earning 7% annually. After 10 years, you're not just keeping up, you've grown your money to nearly double. That's the power of compound growth. Your money makes money, and then that money makes more money. Let's compare. Sarah saves $200 a month in a bank account. John invests $200 a month in a stock market index fund. After 20 years, Sarah has around $48,000. John has over $100,000. Same money, very different result. So why don't people invest? Because they think it's risky or complicated. But the truth is, not investing is the bigger risk. When done right, investing is safe, long-term, and surprisingly simple. You don't need to be a stock market expert. Start with an app that lets you invest small amounts, like fractional shares or ETFs. Set up automatic contributions. Even $10 a week can grow into thousands over time. Of course, you should still save for emergencies, 3 to 6 months of expenses. But after that, every extra dollar should be working for you, not sleeping in a bank. Saving is smart, but investing is essential if you want real financial freedom. So stop just saving and start investing today. And if you found this helpful, tap that subscribe button for more simple investing tips.